What's up everyone? Now the last video I made was just after the close of the stock market on Tuesday, and in that video I mentioned how the job openings report was very hot. There was a lot of job openings which indicated that non-farm payrolls could come above expectations, and in that case the market is going to sell off, and that is exactly what we got. Non-farm payrolls was much higher than expected and the market fell, all right? Although it didn't break key support level on the S&P 500 at 5,800, but I expect that to happen on Monday because after the close over the weekend, Bank of America came up with a report saying that they no longer expect the Federal Reserve to cut interest rates in 2025, and that report is going to spook the market even more, all right? So basically, heading into this year, the market expected that the Fed was going to cut rates 4 times in 2025. On December the 18th, when we had this big candlestick down, when the market tanked over 3%, that was when the Fed said they were only going to cut rates twice. And if now the market thinks that we are not going to cut rates at all, then the market's going to tank, okay? And 5,800 is key support level because if it breaks the neckline of this head and shoulders formation, then the target down is minimum 5,500. And I've currently shorted the market on the S&P 500, on the Nasdaq 100, and on the Nikkei, okay? And these are my short levels, okay? They're all well in the money, and I expect them to go down, all these markets to go down a lot more in January going into February, and that's where we've confirmed basically that we're now in the bear market, all right? And for those who don't know what the hell I'm talking about, I've put the video description, the link of a previous video I've made explaining in detail why we're going to enter a bear market, okay? Just my personal opinion, and these videos are all about my own personal trades. People can choose to tag along if they want, but at their own risk. Okay, so let's take a look at some charts. Okay, so S&P 500, again, if it breaks 5,800 level and it goes down, I'm going to take profit on my Nasdaq 100 shorts when the S&P 500 hits around 5,470 level, where there's a band of support at that level. And at that level, I think we're going to be pretty oversold and get a small bounce. And then I'll short back into the bounce, okay? And then on the Nikkei, I shorted just above 40,000. It's already gone down quite a lot on the futures. And the key support level to break on that index is 38,000. We've been trading in that band between 38,000 and around 41,000 for several months now, and if we break the 38,000 mark, we're going to accelerate to the downside, okay? Plus, on Friday, the yen actually strengthened, even though other currencies weakened against the US dollar, and when the yen strengthens, the Nikkei will fall even more. And the yen strengthened even though other currencies weakened because of the yen carry trade, okay? So when there is a risk on, okay, when the market is going up, people borrow the yen to invest in higher yielding currencies, and then they unwind that trade when it's risk off, when there's going to be risk, and the yen strengthens, and that will cause a bigger fall in the Nikkei, all right? And then if we look at Bitcoin, we bounced off the 91,500 level, which is the key support level that we've bounced off several times in the last few months, in the last few weeks. And then we got back up to around the 95,000 level, but I wouldn't be surprised next week if we break through the 91,500 level and then rapidly tank down to around the 70,000 level by February, because there's no good support on the way down, all right? We rapidly went up and there's no support, okay? Unlike the 91,000, 92,000 level, which we bounced off several times. And the support levels form when traders in the market identify a certain area that they can buy, and when there's a lot of buying at that level, then the market will bounce. But if we fall through it next week because the market thinks that the Fed's going to be even more hawkish, then we're going to get a rapid fall in Bitcoin, okay? So a few warnings for friends, both for investors and traders, okay? First warning is that after speaking to some friends, and I've told them that basically we're going to get a major bear market, I've had at least 2 friends tell me that they're not very good at trading in and out of markets, and they just want to hold on to their investments. Now, let me explain that if I'm right, obviously I could totally be wrong, but all the indicators suggest we've had a big bubble and we're going to get a big bear market now. Again, that's in the video that's linked in the video description. I'm not talking about trading, okay? I'm not talking about, sell now and buy back 2 months later. I'm basically saying sell now and buy back 2 years later when the markets are way lower. If you look at, so one of the fallacies about investing is that you buy and hold and you'll definitely make money over time. With the US markets, that has been true if you've held onto investments for, say, like over 30 years or something like that. But in the short run, you will always get bubbles, and then when they pop, it takes a long time to recover, okay? So if you look at the bubble in 1929, when that popped, the market did not make a new high until 1953. So investors basically lost over 2 decades of time if they bought at the top or they didn't cash out. Okay, obviously they can average down when the market fell in the 1930s, and they were still made a decent return by the 1950s. If an investor bought in 1965 for the Dow, they did not get a return until 1983 because basically the market was just trading sideways throughout the 1970s in a very high inflationary environment, very similar to what we have now. And if an investor bought at the top of the bubble in 2000, okay, it went rapidly down by 2002, and it didn't get to around the same level again until late 2007, and then we had a major financial crisis then, and then the market tanked again, and we didn't make a new high on the S&P 500 until 2013, and on the NASDAQ, people didn't get the investment back until 2016 because that index went down even further when the dot-com bubble burst in 2000, okay? So people who don't cash out at the top of bubbles, what they can see is basically their portfolio shrinking rapidly over the next 2 years, and they might not see their investments get back to the same level for over 15 years, okay? I'm not trying to scare people, it's just history, okay? It's happened multiple times throughout history. And if you look at the Nikkei, when the bubble burst in 1990, it did not make a new high again until this year, 34 years later, right? I'll give you another example, right? China's market peaked in 2007 at over 6,000 points on the Shanghai index, and now it's trading around 3,100, almost 50% down many years later. Okay, so 18 years later, Shanghai's market is actually at almost half the value it was back in 2007. So investors who bought at the top there won't get their money back. Probably never, okay, because China's now in a deflationary environment very similar to Japan after its bubble burst in 1990. So do not assume that just holding on to stuff long term will guarantee returns. In multiple other markets, investors who bought at the top, such as in Japan, never got their money back, okay? Although the US market has always been much more dynamic and is the center of the financial industry. So I wouldn't be surprised if the market does recover, but it'll take many years after a big bear market, okay? And I'm not talking about a mild bear market like we had in 2022 because of the bubble that we've had and because of the environment we're now currently in where the Fed is being hawkish. If it pops, then I see a big bear market, at least 40% down. That's the minimum that I think we're gonna go down, simply because of the run-up is so crazy, so high for the last 15 years, okay? It's like a rocket taking off. And when the rocket runs out of fuel, which is basically liquidity, new money entering the market, it always tanks, okay? So that's my advice for investors. And again, I've highlighted how later on in the year, after bond yields have gone up even higher, parking money in bonds risk-free is a very good way to park money for the next 2 years, in my opinion. Especially if 10-year Treasury bonds hits the 5% yield mark, which I think is very possible over the next few months as inflation picks up, and because of Donald Trump's trade war, because of the tariffs is going to raise cost of goods imported into the US. And one thing I have been wrong is that I thought that gold and silver would fall in the short term because the US dollar is getting even stronger and yields are going up, yet gold and silver hasn't fallen yet. And I'm telling you, like, gold, precious metals is going to be a very good investment in 2025 in the event of a market crashing. Now, maybe gold and silver will trade back down again as the dollar strengthens even more and yields go up even more. But the fact that it's actually gone up in the last week or so, even though the dollar strengthened and the yields have gone up, shows just how strong the precious metal market is, and how once yields peak and we start getting weaker economic data and yields start coming back down, then precious metals such as gold and silver is just going to skyrocket. Okay, so very good investment in my opinion. The other warning is for traders, because I know a friend of a friend basically trades options. And the reason I trade futures is because it gives a trader more holding power. So if he's wrong and he has enough margin in the account, he can ride it out until the next session, okay? Although I always run a tight stop loss, usually around 0.5% from my entry level. And if I'm making money, I'll start putting like a stop profit if the market reverses. But for options traders, especially if they trade really short-dated options like one-day options, they have no choice but to get it exactly right on that day, plus the volatility has to work for them. So if you look at this chart of the intraday on Friday, okay, the market tanked before the cash market and the options market even opened, because non-farm payroll data came out an hour before the market opened. And then the market was already down, and then there was the cash open. And at the cash open, the options traders will mark volatility at a very high level because of the tank that just happened due to non-farm payroll data. And people who buy puts will be buying expensive puts because the volatility is so high. And then if the market then trades sideways and then the movements shrink, then the options buyer basically who bought puts will lose value on their options, both in terms of time value and in terms of volatility. So they might even get the direction right. So let's say if they shorted the NASDAQ, bought NASDAQ 100 puts when the NASDAQ 100 was at, say, let's say 21,000 exactly. Even if it went down to 20,900, it is possible for their puts not to make money because of the time value shrinking and because the volatility near the end of the session was actually less than at the beginning of the session. And that's why I trade futures, just from experience of trading for over many years. Futures are much more fair for the trader. If they get all they need to do is get the direction right. They don't need to also deal with time value and volatility changes. Basically, buying options is kind of like playing poker, but at the end of every game, basically the dealer takes 30% out of the pot, all right? So you have to be such a good poker player that you win enough, not only to win more than half of the time, but also to win and cover the cost of the dealer taking 30% from the pot because of the changes in the time value and volatility. Okay, so that's why I don't do options. And I would strongly advise my friend's friend not to do options, but to trade the rest of this bear market, basically betting on futures going down, all right, shorting futures. So my futures trades are well in the money. And also another thing, like somebody asked me why I said I shorted Nasdaq 100 futures when it was at 21,600. I meant the cash market value was at 21,600 when I shorted the market. The futures actually trades higher than the cash market, and then by March, and it will slowly come down every day, and then by March, when the futures expire, the futures will be at the same level as the cash level, and the futures trade higher than the cash level because the dividend yield on the companies in the Nasdaq 100 is lower than the interest rate. So the higher value of the futures is to reflect that difference in interest rate and financing costs, okay? And slowly over time, the futures will come down to match the cash level, okay? So if somebody is short Nasdaq futures, even if the market doesn't move, they'll end up making like a couple of 100 points on their futures trade by March, okay? Simply because the futures slowly trade down over time. And then two other trades that I'll be interested in is basically on Monday, I'll probably enter my Bitcoin short. Okay, last video I did talk about how I was interested in also shorting Bitcoin, but it was pretty oversold last week, which is why it bounced on Thursday and didn't even go down when non-farm payrolls came out. But we've had the bounce, and I think Bitcoin is a good short now above 94K, and next week we're going to break through that key 91.5K level, and we're going to dump rapidly down to 70K by February. And on the Bitcoin forums, somebody mentioned that they want to buy Bitcoin at 88K, which makes absolutely no sense because they think they're buying even cheaper. But the important thing isn't buying cheaper. The important thing is knowing the actual trend. Are we in an uptrend? Are we in a sideways trend, or are we going to be in a downtrend? Okay, and in the current environment with the Fed being hawkish, as soon as we break 91,400, we're going way down. All right, so it's not about buying cheaper. Okay, the proper trade is actually short into Bitcoin in my opinion, and people can short stuff, you know, they don't have to just go long on stuff. So I don't understand why people have this mentality that they have to buy and hold Bitcoin just because it's gone up for so many years. And one of the best indicators of the fact that Bitcoin is really going to tank is because, like, some guy was saying how his barber told him that XRP, which is another cryptocurrency, is going to go way up. Okay, no offense to barbers, but when everyone, like the taxi drivers, the people, the cleaners and the barbers are all talking about an asset class, that means everyone, including their grandma, is already in the market. So there's no more money to push the market up even more. And that's when the market tanks, okay? Again, no offense to anyone who's a barber watching this video, but I'm just saying, like, when everyone's in the market's gonna tank, okay? So cryptocurrency, in my opinion, is a very good short, which means that MicroStrategy is going to be a very good short, okay? Now, the thing about MicroStrategy, which is a terrible strategy, is that they've been borrowing money to buy Bitcoin, and the last time I checked, their average price was around 63K level for Bitcoin. Which means that if Bitcoin value is there leverage on Bitcoin, which is already a very volatile asset, all right? Bitcoin can go up and down 5% a day, all right? That the fact that it's a leverage on already a very volatile instrument means that when Bitcoin falls, MicroStrategy is going to absolutely tank. And also because, and again, this is my opinion, but if we're going to be in the bear market, I see Bitcoin by the end of 2025 below 20,000 again. And for people who are crypto investors and they think that they get really pissed off hearing this and they think that's impossible, well, it just happened in 2022, so why can't it happen again? And everyone is calling for these stupid levels like 10 million in 2050 or 1 million in 2035. Why? Why would it go up so high, making assumptions about what people are going to do in the next 10, 20, 30 years, okay? And I know the crypto industry markets this and says there's going to be mass adoption, but that's just down to speculation, okay? We have to trade with the facts that are in front of us in the short term, which is that there's a very hawkish Fed, okay? And there's going to be a trade war starting, which is very, very bad for risk assets. So if Bitcoin falls, MicroStrategy stock price is going to fall even more. And if Bitcoin falls below 63K, then MicroStrategy will be forced to sell their Bitcoin at a loss to cover their debt. Okay, they will have no choice, because as their Bitcoin holdings go into a loss, then they'll be forced to sell. And I've seen this before when I was younger in the year 2000, which is there were companies popping up who were doing decent business before in another area, but because the dot-com bubble, because the internet companies, the stock prices going up so much, they started borrowing money to then become holding companies of internet stocks and to get leveraged up and buy internet stocks, borrowing money to buy internet stocks. And when all of those internet stocks, when they popped and they started crashing, those companies who were doing decent businesses, they all went bankrupt because they had to be, they were forced to sell their investments at a loss. And that's what I foresee happening to MicroStrategy over 2025, 2026. I'm guessing they will be bankrupt by 2026 when Bitcoin values really tank, because when this bear market keeps going, it's going to fall below their average purchase price. Okay, so those are my calls, which won't be popular with a lot of people who are Bitcoin bulls or tech stock bulls, but that's what I see happening. So even if you don't agree with me, you don't have to like the video, but follow the channel. And as this bear market evolves, maybe you have a voice on your social media, which gives you analysis on what's happening on the downside and give you accurate trading views. And you can always follow my trades, all right? So again, I've shorted the S&P 500, NASDAQ, and Nikkei at these levels. And I only shorted the S&P 500 at 6,010 because I want to have one short above 6K, because I want to tell everyone that I shorted the S&P 500 when it was still above 6,000, all right? Now I have to roll that in March, but I'm going to keep that short for the entire bear market, okay? Although the NASDAQ 100 trade is much bigger and the Nikkei trade is much bigger, and I expect those markets to fall much more because the real fall is going to be in technology stocks. So my big trade is in the NASDAQ 100, my big short, but I have a small short in the S&P 500, which I will roll every 3 months for the next 18 months. And again, that trade is pinned to my Instagram, which I will keep pinned up for the next 18 months, okay? So good luck with everyone on Monday. I would definitely expect that the market tanks on Monday because of that Bank of America report, and the S&P 500 fall through 5,800 level. And for my friend's friend, I would suggest basically shorting some futures on Sunday night when futures markets open, rather than waiting for options market to open during the cash market, because if it tanks, then the cash market is just going to open low before, because the futures market would have already fallen before the cash market opened, right? Okay, so good luck trading everyone next week. My personal view is that we're going to have a big tank next week. Oh yes, and CPI comes out next Wednesday, okay? If CPI is hot in any way, oh man, the market is going to dump big time, okay? Although I would definitely put a stop in place before that data comes out in case it is lower than expected. Things can always be unexpected, okay? Again, I've already gotten my precious metal outlook wrong, but in terms of how the stock market is gonna do, I think we're gonna go down a lot, all right? So good luck everyone. Hope everyone makes money next week, especially if they're shorting the market.